Hello everyone, welcome to today's US Open live webinar. It is Tuesday, November 29th. I am your host Nikos Zabouras, Senior Market Specialist at FXCM. This is a live session hosted twice a week, every Tuesday and Thursday at 14:20 GMT, meaning 10 minutes before the open of the US markets. During these sessions, I take a look at any news and developments we have during the day and recently, and also we take a look at the technical outlook of certain products. However, before we go ahead with today's session, please read carefully through the risk warning and the disclaimers, and then we will get the ball rolling. Once again, please read through the disclaimers carefully, and then we will go ahead and discuss today's events. Okay, so let's go ahead and get started. As we look at Euro USD, before we move into the technical outlook, let's see what we've had so far this week. So it was actually a pretty volatile week as markets digest news around the COVID-19 situation over in China, and also central bank talk, mainly from the European Central Bank and the US Fed. Now, the week started with risk aversion due to the protests against the lockdown measures we saw in China, the pandemic lockdown measures, which of course come amidst rising infection. Now, today, however, sentiment shows some improvement, mostly on hopes that there will be a softening in the strict zero COVID policy. And again, we need to reiterate this, this zero COVID strategy means that essentially whole communities, whole cities, whole factories can shut down due to a handful of infections. So obviously one can understand the toll that this takes on population, but also on economic activity as well. But as I said, today we've seen some hopes for a softening of this strict strategy, but even though there were some announcements, we haven't really seen anything very meaningful so far. Given the rising infections, the high level of infections, it's hard probably to abandon this strict policy, but it also makes it tougher to maintain it. So we'll see how things will play there. Other than that, we've seen some central bank talk. Ms. Lagarde from the European Central Bank did not offer much new, but did say that she doesn't expect inflation to have peaked yet. Now, on the Fed side, markets have been expecting essentially a slowdown in the pace of hikes, and recent speeches and the recent minutes we discussed about that last week as well point towards that direction, but it remains to be seen if they are ready for a downshift in the December meeting. This week we had hawkish remarks. President of St. Louis Fed, Mr. Bullard, actually said that markets are probably underpricing the risk of a more aggressive Fed compared to a less aggressive Fed, and we also know that they still expect further tightening ahead, Fed officials, I mean, and also a higher terminal rate than they previously thought. So that's pretty much it from this week's developments. As we said, we started with risk aversion. Sentiment improved, and we have seen volatile market activity. Let's go ahead and go to Euro USD, and actually let's shift to the 4-hour chart. So we can see here this volatility that we discussed about in two-way action. The pair actually started with new 5-month highs, but quickly reversed the gains and actually ended last week with losses, and it is also cautious today as well. So where does this leaves the pair? It actually leaves it exposed to a slide towards this region here. We highlight the 200 period EMA, which is at the 1.0199 to 0.0150 region. Although a strong catalyst will be probably required for a further decline that would put parity into question. As we have said, as things stand now, the common currency seems better positioned to defend parity compared to previous visits below it. And also adding to this risk of further pressure is this divergence in the RSI, the relative strength index that we see on the bottom of the chart. So what we had here, we had a price action going to higher highs, but the RSI diverging and actually going to lower highs. So this could be a source of further weakness, but again, at this stage, we view this as relatively limited, let's say. Now, on the other hand, as things stand now, bulls are in the driver's seat and they can extend gains to 1.0609 in this region here, but as we are cautious around further advance towards and beyond 1.0787. Now, obviously, any technical outlook now is a bit tentative, let's say, because it's a big week with many key events that can spur volatility and also determine the next leg of the move. But we will talk about those events towards the end of our session. So let's leave Euro USD behind us and let's actually go to US oil. Again, here we're seeing volatile movement, again because of the COVID-19 situation in China. We need to remind you that China is actually the largest importer of oil in the world and the second largest consumer behind the United States. So we realize how important this country is for oil demand, which is already, let's say, down, and it's projected to lower further in 2023. Other than that, there's also talk about supply, and there is also some hope as well that OPEC will actually further cut production. We remind you that there is a 2 million barrels per day output cut plan in place, and the next meeting where OPEC will decide if it will maintain it or review it is next week on December 4th. So definitely lots to wait here, and of course this push and pull between supply and demand, let's say, news around COVID and production levels has caused this volatility. The week started with fresh 2022 lows. Let's highlight them here. These are fresh 2022 lows, but then as sentiment changed, US oil pushed into gains. Now it has the chance to challenge the 81.27 resistance, but this push and pull between demand and supply that we talked about could make difficult a further push above the 200 period EMA at around 84. So of course a break above this level would put bias on the upside. Now, as things stand now, there is risk because bias is on this downside still, so there is risk for fresh lows towards the 200 weeks EMA, this blue line here, which sits at around 72. The risk for that is still active, but we actually struggle to see sustained weakness below this level, as we've talked about in previous US Opens as well, because OPEC has shown its resolve to support prices. And let's move on. I would like to go to the German index next, and now it's the time that the US index is open, but let's move first to the German index, and then we will go to the SP 500. And we'll stay in a 4-hour chart. So also earlier today, we had the preliminary figures for November's CPI inflation from Germany, and the inflation actually eased, preliminary inflation that is, eased to 10%, whereas last month's final reading was 10.4%. So we'll see how this will be, let's say, embedded into the ECB's thinking. But of course, we also wait Eurozone figures. We'll talk about it later on. Now, looking at the German index, it comes from 8 straight profitable weeks, which is the best streak since 2018. So definitely a massive recovery, and heads towards another profitable month. But it has definitely lost some its momentum, and it's actually on the back foot today. Now, given that, of course, bias is on the upside, this gives it the ability to push towards 14,960 to 15,000, but we're definitely a bit cautious around taking this level out and heading further above. Now, as we said, this week it loses momentum, and this creates scope for losses towards the 14K mark. But the truth is that there is a strong confluence of supports lower on that we believe can contain any further slide. We're talking about the 17,760 to 13,760 to 13,680 region. We believe that this can contain further pressure, but again, as we said, it's a big week for data that could affect the DAX as well. And let's round things off with broader SP 500 for the US. We're 2 minutes into the US session now. Again, this risk aversion led to a poor weekly start for the US index, and actually remains subdued today. Last week, during last holiday shortened week, it had moved higher, but had failed to set new monthly highs. And this failure actually makes it vulnerable to a critical support area. This area here, you can see how many technical levels converge into this region, which is the 3,920, 3,900 area. And we believe that this area has the ability to provide support to SP 500, but daily closes below it could accelerate a decline towards 3,833, 3,812. Despite this pressure that it faces during the current week, bulls have not lost control, and they have the ability to still push higher for new November highs. But this region here, they don't yet inspire confidence that they can push further and take out the descending trend line from January's highs at around 4,100. But again, as we said, we have key events that could spur volatility and determine the next leg of Wall Street and the US indices. Now, we would highlight Chair Powell, who speaks on Wednesday. And this week actually is the last week before the communication blackout ahead of the mid-December policy decision. So anything that needs to be said now. As we said, the Fed has pretty much pointed to a slowdown of the pace of increases, and some officials seem ready to downshift in the next meeting. Others are not yet ready for something like that. So we will be looking to Chair Powell for more guidance on this. Of course, we don't know if he will make any comments around policy and what those are going to be, but we will definitely be looking, and of course at any other commentary from the Fed and other central bank officials. Also Wednesday, we expect the second reading of the third quarter GDP from the United States. The first reading was plus 0.6% annualized, whereas final Q2 was minus 0.6%. The US economy comes from 2 straight quarters of contractions, but we see that according to preliminary data, Q3 is positive and quite robustly so. And it definitely goes into this place well for the Fed's narrative about the no recession narrative. Now, also on Wednesday, we'll get a preliminary CPI inflation from Eurozone for November. October final was record 10.6%. As we said earlier, Ms. Lagarde, the ECB president, does not believe that this was the peak. So we'll be looking for the new figures. And another big event on Thursday, we have the October personal consumption expenditure from the United States. The core PCE is the Fed's preferred measure of inflation. And in September, it had risen to 5.1%, which was the highest since March. Now, since then, we had the CPI inflation figures, which eased and have fueled this, let's say, lower expectation by markets around the Fed's path. So definitely a key data point here as well that again can determine the move of the US dollar and other pairs against it, and also the US indices. Of course, we will talk about the outcome of that to our next session, which is in 2 days' time on Thursday at 14:20 GMT. Until then, you can follow also our written content through your respective FXCM websites. And that's it from me. That's it for today. We'll see you again in 2 days. Thank you for joining me.